What does Bitcoin have in common with a seashell? The answer is a hidden code. They say history doesn't repeat, but it often rhymes. What if I told you that Bitcoin has followed the same hidden mathematical structure across every bull cycle, and that structure isn't just technical, it's natural? You've seen it before, even if you didn't know what it was. The spiral of a sunflower, the curl of a seashell, the swirl of a galaxy. Behind it all lies the Fibonacci sequence, a mathematical pattern found everywhere in nature. It starts like this: 0, 1, 1, 2, 3, 5, 8, 13. Each number is the sum of the two before it. As the numbers grow, their ratio converges toward a key value, 0.618, known as the golden ratio. It appears in biology, in architecture, and yes, over and over again in financial markets, including Bitcoin. So, how do we apply it? We open TradingView, select the Bitcoin Long-Term Index, also known as the BLX chart. This gives us clean historical data across all major cycles. Then switch to the weekly time frame to capture macro structure. From the toolbar, select the Fibonacci retracement tool. But here's where we do things differently. Instead of measuring from bottom to top, we align the 0.236 level with the breakout point, because historically, this breakout is where Bitcoin enters its parabolic phase. Let's take the 2017 cycle. Start your first point at the 2015 low, around $150. Click the second point near the early high, around $1,100. Then drag the tool so that 0.236 lines up with the breakout, which happened near $3,000. Once that's in place, the projection becomes visible, and the 1.618 extension lands near $19,600. The actual top? $19,798. Let's zoom in on the 2017 cycle for a moment. The 0.236 level was tested multiple times. It first rejected price, then broke after 7 weeks, then was retested and held as support 6 weeks later. Only after that confirmation did Bitcoin launch into a full parabolic move. Even more impressively, that same level acted as major support again in December 2018, helping form the bear market bottom around the $3,000 zone. That gives us a template. Now, in 2021, we saw a similar pattern. The 0.236 level was first tested in July 2019, but it took more than a year to break above it, which finally happened in October 2020. That breakout kicked off a powerful bull run. While many believe the top came in April, Bitcoin didn't actually peak until November, aligning closely with the 1.618 extension near $68,000. That's 2 cycles. Same structure, same Fibonacci logic. So, what about 2025? Before we dive into it, here's a quick caveat. This next section assumes that Bitcoin is still following the 4-year cycle theory, a framework that has governed Bitcoin's macro structure since inception. If you're unfamiliar with that, I've made a full separate video. The link is in the description. Now, with that in place, let's look at 2 possible scenarios for this current cycle. First, the conservative case. In this model, we anchor the 0.236 level at the October 2023 breakout, after months of failed attempts going all the way back to April that year. Using that anchor, the 1.618 Fibonacci extension projects a top at around $128,000. Bitcoin already touched $124,500 and is currently trading near $110,000. So the question is, was that the top? Or are we repeating 2021, where price briefly pulled back before hitting the 1.618? Secondly, the more bullish case. In this second scenario, we use the breakout between November 2023 and January 2024, which included a clean retest. And from a technical perspective, it was even more decisive. In this model, we see a well-defined structure. Levels like the 0.382 and 0.618 acted as strong support. The 1.618 extension in this case projects a top closer to $175,000. So, which one is it? 128,000 or 175,000? Only time will tell. But in both cases, the method remains consistent. and the golden ratio continues to act as a powerful anchor for long-term projections. One final note: this is a macro method. It doesn't work early in a cycle. You need a confirmed bottom, a reaction high, and a breakout to anchor the Fibonacci projection. Without those, the entire structure falls apart. Also, don't ignore the 200-week moving average. Historically, it has aligned almost perfectly with Bitcoin's previous long-term cycle tops. We'll be covering that relationship and how it ties into the 4-year cycle theory in a separate breakdown. So, what's the takeaway? Markets aren't random. Price is driven by human behavior. And human behavior follows patterns. Fibonacci isn't speculation, it's structure. And structure is what gives us insight. Thanks for watching. If you want to go deeper into market cycles, make sure you're subscribed and hit that like button if this blew your mind. The next phase of this market is only just beginning. See you in the comments. What's your Bitcoin price prediction for 2025?